Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Wednesday, the 7th of May. Investors have this morning woken up to a bit of a flight to safety that we've got going on. That's happened on Wall Street overnight and in Asia as well. That's basically moving on, just continued concerns over the flight to safety on the tensions in Ukraine, which seem to be just deteriorating further by the day. And it just seems as though that every time something comes out over the Ukraine, the safe haven assets are pulling in the strength. Certainly the yen is strengthening. It had a significant gains yesterday against the dollar, and that has continued into today, pulling dollar yen ever lower. And stock markets as well are under a little bit of pressure today, just under about 0.5% lower in early exchanges for the European markets. The suggestions that Russia are trying to get the presidential elections delayed in Ukraine for the end of this month is basically what obviously Russia has been pulling for all the time, to delay the democratic process, to legitimise the any sort of government that comes into power, and that is obviously what they're pulling for. And the Americans are obviously trying to persuade the Ukrainian interim government to push ahead with the elections, but obviously there are further outbreaks of tussles between the two, the government forces and the separatists as well. So that continues to happen in the eastern part of the country, and that is resulting in flights to safety across the board pretty much today. So that's what we're seeing. Gold is also higher. That continues to find support above 1300, and the safer haven plays are in focus as well. So that's generally what we're seeing. Also, you've got to look at the fact that the VIX volatility is this gain on the rise, seems to be pulling higher once more, having bottomed out on Monday. That was it's now pulling higher once more. Actually, that was Friday. Sorry, pulling higher once more in the last couple of days. So that reflects the once more the flight to safety. And also what we've seen is the dollar index, which continues to fall away now. It's back towards the levels that it had not seen since late 2012. So this level around 79 seems to be a big support area now for the dollar index. And obviously if that gets broken, then you'd certainly be seeing dollar pairs such as dollar yen significantly lower, probably into the 100s, maybe even below, and that would probably also suggest continued upside breakouts on euro dollar and sterling dollar as well. So just bear that in mind, that the dollar index is now back at these key levels, and if it can't turn around, then certainly these you could see some big breakouts on these charts. Obviously cable has already broken to multi-year highs, but certainly euro dollar as well is on the brink in the medium term. Okay, the main thing that we need to focus on today economically is Janet Yellen's testimony. That's at 3 o'clock British time, and she's giving her testimony to the Joint Economic Committee of Congress. And to be honest, it's unlikely that she's going to come out with a huge amount that's going to rattle the markets. She's probably learnt her lesson following on from her first press conference as at the FOMC, and we had an FOMC meeting last time whereby the statement didn't come out with a great deal. It sort of tried to settle everyone down, and I think the chances are that she'll probably try and do that again, not come out with anything outlandish. I mean, her comment about 6 months between tapering and tightening did have an impact on the markets, and it's unlikely that she'll come up with anything quite like that this time around. So it's probably more of a holding statement that she'll give today. So we'll wait and see what happens this afternoon on that. But 3 o'clock it is. My chart of the day is the S&P 500. The S&P, as I said, has undergone a little bit of a correction on the back of that flight to safety that we've had, and this is the second time we've sort of had this attempt to push towards the highs. It's rolled over, and it just depends on whether now this can regain some footing. The immediate support is the 1867 key low from 2 days ago, which was a reaction low, but that reaction has almost entirely been unwound now. So we'll wait and see if that holds. It's to be honest, with the European markets lower in early trading, the chances are that's going to come under significant threat early on, and you might even get a test of that 1851 key low that we had from the 28th of April, and that would be probably the well, certainly near term, that is a significant support that needs to be held if the bulls are going to remain in control. This primary uptrend continues to rise, obviously, and it is currently coming in around 1834, so just bear that in mind. There is a big band of support around between 1838, you'd argue, and 1838, which is the 38.2% retracement of that Fibonacci retracement of that bull run higher there, and also between 1838 and 1850. So there is a band of support coming in around those levels that certainly the medium to longer term bulls will be looking to hold on to. This is the intraday chart. You're sort of more in something that of probably a trading band. Excuse me. Something of more of a trading band over the last few weeks rather than pushing higher, and also you've got these moving averages which are converging and look like they're about to turn lower in bearish sequence, so that's not all that positive. The momentum indicators are also falling away, so it certainly looks like it could be coming back towards this 1851 area in the near term, which would be the as I said, the start of the key support area coming in. So as I said at the open, you may well see that 1867 key low from 2 days ago tested and opening that 1851 low. Okay, so I wish you good luck in your trading, and I will speak to you later. Thank you.